Hello everyone. In this session, we're going to see about the conversion balance. Now, conversion balance is all about when you already have some opening balance before you start your zero. So, for example, let's say if you already have some balances that comes from the last month or from the last period, so you have to enter this information in the zero. Otherwise, your report will not be accurate because, for example, if you use all the records in Excel, or if you record all this information for your supplier and for your customer or for your bank in the manual record or in any other software, and if you like to move to zero, you have to put all the opening balances. For example, the fixed asset, current asset, any supplier overdue balance, any customer balance overdue. You have to record it everything as opening balance the day before you move to the zero software. So let's have a look how does it work. For example, you have to go to the conversion balance. So it's from the advanced setting, and you can see the conversion balance. And the conversion balance will tell you like which day you want to put these balances as the opening balance. For example, let's say we want to start zero from 1st of May. So that means 31st of April will be our opening balance. So they enter your account balance as a 31st 30th of April. That means from 1st of May we are moving to zero. So before that day, all the information we have like as opening balance we have to enter here, so that the information we're going to enter from 1st of May is adjusted with the previous balance. Now you can see here all this information we have here. If we like to see the whole chart of account, we can click here show all accounts. It will show the all accounts. Now let's say, for example, if I like to say I have some money on the bank. Let's say we said on the bank we have £10,000 already, so that will be debit for us. If there is a credit, for example, if the bank is an overdraft, we have to record on the credit side. And how much sales we have already. So let's say we move on the middle of the year. So if we already have some sales in store, let's say 5,000 we have sales, and let's say if we have some sales on the online, let's say we have 5,000 sales online. So all this thing you have to record it. For example, on the petty cash we have some money 500, so you have to record it everything. Let's say the cost of sale, let's say we have 2000. So all the balances we have to record it here in order to match the balance from tomorrow. So all this information you can take from the previous record, from the previous accounts, from the previous financial statement, but you need to make sure like you included all this balance. For example, accruals, any accruals that is you have to pay, so you have used the services but still you need to pay for that. So all of this thing you have to record it, and these balances will be adjusted with the zero automatically from tomorrow. So this is basically the opening balance. Opening balances is before you actually start using your zero software. So if you have already some balances from the last period up to yesterday, you have to record all the information here. So it depends. For example, if the company don't have any conversion balance, let's say your company is a very new company and there is no transaction, no money on the bank, you just open your software first and from tomorrow you will do all the transaction, then you don't have to do anything with the conversion balance. But if the company is already ongoing and this company already have some money on the bank, some customers still need to pay, some supplier you need to pay, so you have to record it all this balance. So otherwise like it will not be create the accurate report for the profit and loss and for the balance sheet. So you need to be very careful with that. So if you have any opening balance, you can start with the conversion balance. You can import this conversion balance as well, but it's better if you can check like what is the conversion balance, make a list on Excel, and after that you record it on this sheet. For example, if you find something and it's not here, for example, you have a bounce back loan and it is not here, you have only the loan, so you can say like I want to add a bounce back loan, and you can add a line and you can add it anything like from here, so what it is, and you can always create if you need to. You can change the name. For example, this loan you can say I want to say BB bounce back loan, so BBL, and you can do that as well. So this sort of thing you can change, you can update, and you can have the balances as opening balance for your conversion balance. So that's how we can see. So let's have a look what they're saying here. And every time if you would like to change anything, you can always do that from here. All right, so the conversion date is all about when you want to show the data as the opening balance. As I said, like it depends when you're trying to move. For example, we want the conversion date on May, so that means like up to 30 of April it will be our opening balance. So for the conversion date, you need to enter conversion balances, and also known as opening balances, on 30 of April. So all the balances we're going to enter, it will be 30 of April, because from May we're going to start the zero software. So that's how you can actually enter all the conversion balance, and it will be very helpful if you have an opening balance. Some of the organization, they prefer journal to enter the conversion balance. This is still fine. If you like to enter the opening balance as a journal, there is no problem for that. But if you want to enter from here, you can still do that. So but we have to remember, when you enter the conversion balance, it has to be match the debit and credit, because otherwise it's not going to be taken. So when you do that, you need to make sure the debit and the credit is equal, so that the double entry take place properly. And that's how the conversion balance need to be updated in the account.